Chad, what the hell is happening with the IRS right now?
Man, there's a lot happening with the IRS right now. I think to fully understand where the IRS is at right now, we got to understand where they're coming from over the past couple of years. During COVID, um, the IRS, quite honestly, just became complete dysfunction. I mean, it was,
Right.
they were not equipped for something like COVID and the need to go remote and having all
Mm-hmm.
that technology in place. And a lot of people have heard the horror stories about trailers full of mail and them not processing things. And, that certainly was my experience with a lot of things. I mean, there's issues that were just now getting resolved that came during
Mm-hmm.
COVID, and it's taken 2-3 years to get those resolved. And so,
And for some of that, you almost don't want to necessarily just blame the IRS. I know it's an easy thing to do, but there's all these new programs that came out that they had to manage and things like that were kind of crazy.
that's a very good point. I mean, in some ways, for as much dysfunction as there was in things, the fact that the PPP was rolled out so quickly and
Mm-hmm.
got that money, and that wasn't the IRS necessarily directly, but that was a pretty monumental feat to get that money into the hands
Right.
of business owners, and so the IRS had to deal with a lot of changes, a lot of rule changes, and implementing those, and so they did what they could, I guess is how I would phrase that, based on the limitations that they had in place. And so they are now coming out of that. I will say that, they
Right.
seem to be getting caught up on the backlog and making progress as far as getting phones answered. I mean, that was a big problem.
Right.
I stopped calling the IRS for 2 years because you could never get anybody on the phone.
Right.
It's really hard to get things resolved if you can't get an IRS agent on the phone, and a lot of times. And so they are slowly coming out of it, I guess is how
Right.
I'd phrase that. And, they are making progress and still got a long way to go. But, to fully understand where they're at, I think you got to understand that, and they are trying to make technological improvements. There was I believe it was in the Wall Street Journal or New York Post or something, but there was an article where they let a reporter in to an IRS processing facility.
Right.
And there's comments in that article about how he walks into basically what's the cafeteria, and there's just stacks of paper everywhere.
Right. Can't imagine.
I mean, those are all manually keyed in. The IRS doesn't have technology to scan them in, and OCR, they don't have that ability, and
Mhm.
they are trying to implement things like that now.
Yeah. Well, you heard that. Well, the number that keeps getting thrown around is 80,000. They're going to hire 80,000 new IRS agents. Are they going to be able to catch up on the backlog? Are they going to use this to target new people or have more audits, that sort of thing?
I think there's a number of things that will be utilized for. I think again, to get the full picture, the IRS, and depending on where you read or where you get your information, you'll see anywhere from 20 to 50,000 agents are eligible and expected to retire within the next 5 years. So to some degree, are they just replacing what would be going out the door? The budget law that passed that enabled, or the infrastructure act that passed that gave the additional funding to the IRS, it's not like they're going out right now and hiring 80,000 people. This funding is over a 10-year period. How the IRS is funded and what they use that money for has become such a political aspect.
Right.
There's such a political component to it now. I'll be shocked if this all actually plays out, right, with all these agents and all this funding. There's already been measures to cut back some of the funding based on other bills. And so, the Republicans have had some success in that already.
Right.
And so my immediate concern is not necessarily about these 80,000 agents. I think if all this funding went through, I think in full transparency, I think it'd be 10 years before you really saw, okay, we have a legitimate increased workforce. I think that will go after enforcement. And, the IRS, over 50% of their budget is for enforcement. And so they are certainly utilizing those dollars for enforcement efforts. And so it's going to be interesting to see where that goes.
Yeah, I saw an article. This was from The Hill, And the headline of the article was the IRS establishes new pass-through division to tax high earners. All right, and then you scroll down a little bit, and these kind of businesses are known as pass-through entities, so your S corporations and things like that. And then the IRS said on Wednesday in a statement that the creation of the new unit is part of an effort, in their words, to restore fairness in tax compliance by shifting more attention onto high-income earners, partnership, large corporations, and promoters abusing the nation's taxes. So here's a question. In their statement, it says restore fairness, but then they're clearly targeting high-income earners.
I guess it depends on what your definition of fair as far as who they go after, and on that note, one of my fundamental problems with the tax code is how it defines high income earners, in this day and age. Somebody that is making, $200,000, $300,000, $400,000, don't get me wrong, has a very good living, But if you have a family of four and you got to send two kids
Depends
to
where
college,
you're at. New York City, that's not
California,
doing very well,
I mean, it's a lot of Americans make far less than that, right? And so, it depends on how you view it. I don't view people making in the $200,000, $300,000, $400,000 range as the super wealthy, and the IRS to some degree has acknowledged that, and as part of the additional funding, there was a unwritten promise, if you will, that we're not going to use these dollars to go after people making less than $400,000. I don't think they're going to do that immediately. My concern is when they are, 10 years, if they do get, fully ramped up and everything, and they've gone after all these high income tax people and high net worth taxpayers, what are they going to do then? Right. And we'll see what happens. I think we're years away from that. I think in the immediate, future and for the next several, 5 years plus at least, I think they're going to have their hands full with going after these pass-through entities, which their main focus is on large partnerships. And they recently came out and said, we're basically going to audit every large partnership with over $10 billion of assets, and so that's the top 1% of the top 1%, right? That's not your everyday taxpayer. Let them go after that. In my mind, that's not the bulk of my clients. That's not the bulk of, the everyday taxpayer. So from that perspective, let them spend time on that. It probably takes a year or 2 years just for them to audit one of those, if not longer, and so they are using some new tools to go after those. They are going after millionaires that owe back taxes. There's, I think there was a stat the other day that I saw that they're pursuing 175 millionaires that owe hundreds of millions of dollars in back taxes. And they've already started efforts on that. They've collected tens of millions of dollars so far in that regard. And so they're going to start at the top is what it seems like they're doing. When they work through that, where does that put us? And that's my concern is, are you going to start harassing these people that make $300,000, these business owners that are providing jobs and creating jobs and reinvesting? The tax rate schedules start to really penalize people after, when you get to those income levels. How
long does an audit typically take? Let's say you're one of these millionaires that's being targeted, and they're going through. This is why I asked this question, because I saw an article. It was, I might get the exact numbers wrong, but it was IRS recovers $38 million from 6 individuals. Where my thought immediately went to was, how much money did it cost the IRS to actually recoup those dollars? I mean, how many agents were working on that audit to recoup that $38 million? Did it take them a year? Did it take them 2 years? Was there 50 agents working on these 6 audits? And what's our return on investment in the IRS? Because isn't that ultimately it? Our tax dollars are funding the IRS. Therefore, they're essentially there should be a return on the investment, right? Every single audit has to recoup more than it costs, right? So my question is, how long does that normally take? Like if you get audited?
So it can depend is the answer, as with most
Oh
tax
boy,
and
here we
accounting
go.
things. It does depend. There are different types of audits. There are desk audits where they will just send you a letter and say, hey, send us these documents to prove this deduction or
Right.
whatever. And so those typically get wrapped up a lot quicker. I mean, they can be anywhere from, I would say probably the minimum is going to be 3 months, 6 months. But the person that's processing that probably has, I don't know, however many
ton of them.
hundreds of those going
right.
on, right? And so, I don't know that there's a lot of resources in that regards. The IRS does use kind of a computer scoring system to when you hear the term flag a return, it's it runs it through, and if it triggers something that says, hey, you may want to look at this further, it kind of gets dumped into this other bucket as to be selected for an audit. And so now, that being said, these complicated audits, they can take years. And so it just depends on the scope of the audit. It depends on what they're looking at. It depends on the complexity of the taxpayer that they're auditing. They are making a big focus on partnerships, because for years they did not audit partnerships. Partnerships can typically be a structure where you have, one company and then a layer on top and a layer, and then it splits off into 3 layers. And, they basically stopped auditing them because they didn't have the resources to do it.
Right.
They as part of the Bipartisan Budget Act, the BBA, they changed all those partnership audit rules, and they said, we don't really care about that anymore. We're auditing the partnership and we're charging them the highest tax rate. So they are really going after these, and they haven't been able to really successfully audit them in years. And now they have tools that, on one level are very complicated, very, they're just very detailed. And, I transparently have an audit going on now, and it's hard to get information from the IRS on how we even navigate through this, because they're so brand new. These are the rules, and these are the things they're using to go after these partnership groups with the $10 billion in assets.
Right.
And so it's going to be interesting to see how that goes. But I imagine those audits will take 2-3 years, and would be my guess. I don't work for the IRS. I don't understand all their, inner workings, if you will.
Probably the more money, the longer the time. I mean,
exactly. It's going to be the more complex thing. I mean, $10 billion of assets. That's a lot of paperwork.
I know.
I mean, you have an operating business that brings in $200,000 a year. You probably got 300 pages of paperwork if you were to get audited, for a taxpayer like that. I mean, so these partnerships with this much an asset, I mean, I can't imagine, how many thousands and thousands of pages they're going to have to wade through to do that. And so, for businesses under that, transparently, it's probably a good thing. Let them put the resources into that. I think the IRS is finding, to your point about cost benefit, that the higher income, the higher net worth taxpayers they go after, they're getting more return on those dollars.
Right.
And
that's why they go after them.
That's why they're going after them. And we'll see how all that plays out, and if they continue to do that. The problem is, transparently, these are complex rules, and you have tax attorneys and you have CPAs that are really intelligent people that don't fully understand them, and you have an IRS agent that makes 50, 70, 80 grand a year or whatever it is. Are they going to have the
the tools,
skills to fully understand those? And so that's where it gets challenging.
And then is that IRS agent, are they well trained?
Exactly.
Are they going to be able to really go after a multi-billion-dollar multinational corporation that has all sorts of money to hide things and do things a certain way, and they know the tax code better than anybody, so they know exactly what to do? Who knows? Let me ask you this. Okay, you always hear this term, fair share. Okay? I read in 2021, Elon Musk paid $11 billion in taxes in 2021. I'm going to say that again in case you couldn't hear me. Elon Musk paid $11 billion in 2021. I have a concern that you keep hearing this term fair share. Rich people don't pay their fair share. You have people like Elon Musk paying $11 billion in taxes. If I'm Elon Musk or somebody like Elon Musk that's obviously created tons of value beyond just, Tesla, you have to look at all the companies he started. He's got the one company that tunnels underground. He's got one company that puts stuff in your brain. He's got one company that, has solar panels on your roof, all sorts of stuff. This country was founded on the idea that we have a free market and that innovation wins in a free market. And I believe in that idea. And I think the free market is important. And I think innovation is critical. And this should always be the home to that. If it gets pushed too far to the point where we're criminalizing people like Elon Musk, who is obviously being targeted now by the Department of Justice as well, that's a whole other topic, they're going to be less incentivized to bring their companies here to the United States, right? He didn't have to start all of his companies here in the United States. He could be anywhere in the world and start these companies, but he does it here because the opportunity here, obviously the market size. But if we keep targeting people like him, what are your thoughts on this whole idea of a fair share? Is $11 billion a fair share?
Oh, I think fair share is a subjective term, and people use it in meaning different things in different ways. And, the counter argument to that is, how much money did he make to be in a position where he owed $11 billion,
Mm-hmm.
And I can guarantee you that Elon Musk has a team of tax advisors, attorneys, and he is doing probably everything he can to legally pay as little as possible as he can in taxes. That being said,
but is that his fault though? I mean, think about it. The rules are set up in a way, right? And it kind of goes into this other question I have about taxes being moral, right? You hear this, the rich people should pay their fair share. The wealthy should pay their fair share. That all sounds great if it was going to some pot of money that was being used to feed the world and do all these happy things. But the truth is the money gets wasted on things like, discovering how frogs interact with each other on cocaine, stuff like that, the National Institutes of Health researches, or, look at all this money going to Ukraine right now. What if you disagree with that? Now your tax money is going to that? I mean, you don't have any say over how this money is utilized. So I always hear this, fair share thing, and I'm like, fair share for what? What incentive is there for people to pay more tax, beyond just, kind of being dumb and not using the rules as they exist in the tax code?
I think some of the things you're hitting on there are that there's a lot of layers to what we're talking about here. And so to me, we live in this society where, everything is so political now, right?
Mm-hmm.
And Democrats hate Republicans, Republicans hate Democrats, and we're in this society where you almost got to be whatever you affiliate with, you have to automatically reject the other stance.
Mm-hmm.
And I think that's part of the problem here. There's not that idea of, okay, let's compromise, let's work through this. And where I'm going with this is that leads to the inefficiencies in the way our government operates is
Mm-hmm.
mind-boggling. And if any corporation in America operated the way our government operates, they're out of business, easily. And so the money that's wasted in inefficiencies creates the need for so much more money to be collected. And if there was a way to really get our government focused on, okay, how can we compromise? How can we meet in the middle? And how can we start operating more efficiently? The dollar savings from that alone, over time, and it would probably be some investment up front because utilizing technology would probably be a big part of increasing those efficiencies. And there's going to be upfront investment for that. I would love to see if that were the case and we could get to that point, how much money could be saved and therefore passed along to the taxpayers. And that opens up the whole other door for conversations with politicians and term limits and things like that. And, that's not really what we're trying to address here. But to me, and I'll give you an example of how it's the desire to not meet in the middle is causing problems. So in 2022, there was a change that was actually a part of the Tax Cut and Jobs Act that Trump signed that created the need for research and development expenses to be capitalized. And what that means is you can no longer expense those directly against your income as a business owner. And you have to capitalize, put those on your balance sheet, and then and then amortize them over 5 years. Okay. Both sides agree. The reason it was put in to not start until 2022 was that, at the time, everybody felt like it would never stay because nobody thinks that's a good idea. It is literally penalizing innovation, which is completely against everything our economy or our nation, and so instead of Democrats and Republicans coming together, because they both agree that it is a hurdle to innovation and should not really be in the tax code, instead of coming together and agreeing and just saying, hey, let's change that one thing, because that's something we can both agree on, each side tries to get 10 other special interest things or other things attached to it or whatever. And so now we're in this standpoint where software companies that are losing millions and millions of dollars a year and companies trying to research and develop new products are losing money on them cannot get the tax benefits of that reinvestment because the two sides won't agree on paper to something they both agree, in the press. And so I don't know how you get around that. How do you get around that? I don't know the answer to that. And,
there's a desire to keep the divide. You think maybe?
I mean, I think that goes to our society as a whole. And it seems to be, as a nation, we're so polarized and one way or the other, and you can't be both. And truth be told, what I've found of 85% of people, if you talk to them, is that none of them agree 100% with Democrats. If they're a Democrat, none of them agree 100% with Republicans, and they're all in the middle. Everybody I talk to, except the far extreme on each side, falls in the middle, and so, that's above my pay grade, is solving that world's problem. But if we could get past that, we could start to increase efficiencies. We could start to make the dollars used in a more efficient, productive manner. And then honestly, there'd be a need for less dollars,
And I think what you're talking about, people would be more willing to pay tax, instead of trying to hide, because it's just, if the money's not being wasted, if it was being used efficiently, as a defense contractor and as a veteran, I've seen more waste than anything. There's always money to spend before October comes around and that money gets used. The other day, they just lost an F-35. I don't know. That's
how many tens of millions of dollars is
that's
that
at least
plane?
a $30 million aircraft, and it just got lost. And these are crazy numbers. It also sounds sort of like the voter ID thing. Like, I think most sensible people don't have a problem with showing their ID when they go to vote. I don't think most people in the middle politically have a problem with that. There's a far left group that is like, no, because it's going to lower Democrat turnout or their ability to vote, which doesn't even make any sense. I think it's one of these issues that they use as kind of like bait. They throw it, that like voter ID, and maybe the taxing is kind of like this, where it's they can attach something to it. They'll say, oh, well, you're racist if you want voter ID, right? So they use it as bait. And then if some Republican is running and says, I want voter ID, then they're going to say, oh, that's racist. See, we said it was racist, therefore. Anyways, I wish taxes weren't like that, though, because they're so critical to actually, keeping our federal government running, and really we want our taxes to be used efficiently for the most part. That's 100% what we want. You talk about technology. Chat GPT is pretty amazing. These large scale language models, I feel like they can do a lot of the work that these IRS agents are doing. But I know from a federal acquisition standpoint that it's very difficult for the government to purchase, acquire, and integrate new technology. So that's going to take a while. We'll see the benefits of it on the commercial side for years before the IRS will ever touch it.
It's interesting you bring that point up, and I agree. And one thing I will say that I don't know if impressed was the right word or amazed, but it is how quickly the IRS seems to be starting to utilize AI. They have come out and said they are starting to implement AI tools to spot patterns and trends, mainly among these large partnerships. They are using them to go after taxpayers, which this is another initiative that have foreign bank accounts. There's if you have a foreign bank account and it has over $10,000 in it, you have to disclose that to the IRS. And if you don't, there are significant penalties. And so, honestly, it's a rule not everybody knows. It's a rule that...
How would they even know?
Well, that's where, they put in, the IRS in the U.S. have a lot of tax treaties with other countries and things like that. Or in order to give them money or to do business with them at the U.S. government level, they enforce reporting requirements to these other countries and these other, business entities in other nations. And so, they use their power to to get that information. And not every country shares information with them, but they certainly try to put pressure on it, And so,
I want to maybe a little bit later get some tips from you about, the way that business owners and W-2 employees can save on taxes. We talk about that a little bit later. But you're kind of bringing up the concept that I wanted to touch on, which is overreach, the IRS overreach. You're always hearing people worried about that. I saw something recently about transactions over $600 were going to be monitored by the IRS. Can you talk about that? Like what that rule is? And what does that mean for people?
That's a very big rule that could create a lot of issues. Essentially what the rule is that, businesses like PayPal and Venmo and things like that are processing payments. We live in this digital age now. There's all these payment processing options. If they process payments for somebody identified as a business, on that account, they will issue a 1099 for things over $600. Okay. Now this was supposed to come into play a year or two ago. It keeps being delayed. I think it's supposed to come into play next year, but there may be another potential delay. The issue is, what about if I'm reimbursing somebody, or what if I'm doing this? Right. And, there's all kinds of things where I may collect money, but it may not be business income.
So what you're saying that this is the $600 is only for the electronic accounts like the PayPals and the Venmos. This is not for your bank account.
To have money coming in and out of your bank account, you're generally going to have some payment processor, coming in. If I just collect an ACH payment from somebody or something, there's already requirements that say, depending on how my tax classification is, if they pay me over $600, they need to issue me a 1099. So those rules are already in place. What's different now about this rule is it's putting that reporting requirement on that payment processor. Okay.
I gotcha.
Several years ago, credit card processors have that, that rule became law for them, and they issued 1099Ks for that. That's what this form is. It's called a 1099K. Now they're putting that requirement on every payment processor that processes over $600.
I gotcha.
And
They're
so
trying to play catch up.
Yeah. I pay, my friends, some of them probably $700 just reimbursing meals, and hey, we're going to, a concert here. I'll reimburse you for the tickets, and most of what I've seen is, in those payment processing accounts, they now have a function to say whether this is kind of a personal thing or a business thing. But it's going to be a nightmare. It is going to be an absolute nightmare. There's going to be all kinds of errors. Things are going to be, there's going to be all kinds of letters where people get letters, and generally how the IRS asks a question is they send you a letter that says, "Hey, we're proposing that you owe us this amount.
Right.
Tell us otherwise."
Yeah.
The IRS often refers to deductions as legislative grace, meaning the legislature is giving you grace by allowing you to take deductions.
Right.
If I'm a business owner and I take in $100,000 and I pay out $75,000 to employees, is that really grace that I should not have to pay tax on the whole 100,000?
Right.
As opposed to the net amount, but
that's such an IRS thing to say. Legislative grace. It's so silly. I mean, we elect the legislature, so we decide these things. Ultimately, it should be that way, anyways. All right, so it sounds to me like they're already kind of monitoring these types of transactions, and the average person probably doesn't have too much to worry about.
I don't know if I'm going to say that. I mean, the hard part is going to be the implementation of this thing.
Yeah.
I mean, how many people does Venmo have as users, right? And so
I'm sure they have a lot.
You're going to tell me they're going to get all of those forms 100% right for everybody? I can't imagine that case is yes, or that answer is yes. But we'll see. And like I said, they have delayed it for a couple of years now, and there is a lot of support to continue to delay that. But as of now, it will be what it is.
So most people are W-2 employees, right? What are some? Is there anything that a W-2 employee can do to pay less in tax at all? I mean, it seems to me like the options are pretty much limited, but
I'd say that's a fair statement. I mean, the Tax Cut and Jobs Act, part of it was to simplify taxes. And for W-2 employees, I would say they did that. It made some changes to the itemized deduction front that, make things a little bit easier there. That's one of the most, when I have talked to taxpayers and clients over the years, that's one of the most frustrating aspects for them is, you get a W-2 and they owe a bunch of tax, and there's just not a lot you can do to offset it. I mean, charitable contributions, charitable giving is one of the best things, and that's where I think a lot of what you see nowadays is people trying to start businesses to generate tax deductions. And I think that's why you see a big driving force of that, because they're trying to create other buckets. I got my W-2 income and it's in this bucket, but if I create a business and I can get a loss, and is there a way to use it to offset this bucket and things like that? And that's where a lot of the focus is. And that's probably a lot of the growth in TikTok trends and I will say this to your listeners out there: please do not take your tax advice from TikTok. Get a professional that knows what they are doing.
TikTok tax.
We'll talk to you about ways to save money if there are for your situation. And so
Chad, you might be onto something, man. You're gonna be the first ever tax influencer on TikTok.
I've thought about that, and I think I told you about my idea. I got a son named Max. He's 1 year old, and we are investigating and getting close to starting a platform called Max's Taxes, where I'm going to try to use Max and his toys to help explain more complex tax subjects and provide advice.
I'll even take your advice a step further, and I will say, don't take any advice from TikTok, period.
That's really what I wanted to say, but I didn't want to alienate any viewers here, so. But yeah, I see a lot of bad information.
Unless you're on my TikTok. If you're on my TikTok, you can listen to everything. It's perfect. It's kosher.
There you go.
You should be happy there.
I mean, unfortunately, we live in a society where everybody wants everything to be easy and to only take a minute and to not have to deal with a hassle. And the tax code is not set up that way.
Right.
To do things, you have to have primary business reasons for taking business deductions, and you have to be able to substantiate that, hey, I'm doing this for a business reason to generate a profit, you know. So you need to have a plan on how to generate a profit, you know. Now, sometimes it takes a little while to generate a profit. And so that's where a lot of people, you know, are trying to take advantage of these, you know, these tax rules that are out there to the best that they can. But, you know, one thing I see a lot is, hey, start a Montana LLC and put your vehicles in there. You know, no, don't do that. Whatever you do, don't do that. But, you know, there's no legitimate business reason for that. It's just to try to find a way to deduct your car. The IRS will see right through that. You know?
Right.
And so, but, you know, if you are starting a legitimate business, there's certainly a potential need for, you know, autos and you know, being able to deduct those types of expenses and things. And so if you do it the right way and you are trying to generate a profit and have a business purpose, then there certainly can be some tax savings along the way.
So if you're a small business owner, and you're thinking about tax strategy, you know, what would be some, you know, high level things that they could do to
So that's
prepare?
a pretty broad question. Right?
I know it's a broad question.
You know,
It's broad on purpose.
How I kind of, you know, approach tax planning with clients is we look at it at different levels, you know. What Donald Trump is going to do for his tax planning might not necessarily be what Jane Smith is going to do for her, you know. So level one, I call getting the most out of your business, right? Are you using your auto for your business? Do you need an auto for business? You know, maximizing those types of things, the home office, you know, is there travel deductions that...
Is it true that you can use your house you can rent your house to your business for business functions? I think it was $14,000 a year, something like that. You can do.
So what you're referring to there is the Augusta rule, is what it's commonly known as. And what it was designed and why it's called the Augusta rule is, you know, a lot of taxpayers, you know, around the masters were, you know, would rent their house out for, you know, a week or two because they can get, you know, a significant fee for that during that time frame. And so, you know, the IRS basically said if it's less than 14 days and, you know, then you don't have to report it. So to answer your question, you know, I own my own business, right? I can't just rent my house for no reason for 2 weeks and pay myself $14,000. You know, if I legitimately was going to, you know, have all my staff come stay there for 2 weeks and we were going to do a 2-week retreat, you know, or something like that, you know, that's the kinds of things that would make that rule eligible, you know, for to be utilized. And so, you know, again, you got to look at what's the business purpose of it, you know, and that's if you can solidify that, then, you know, tax deductions are, you know, a little more maybe available and things like that. If you have a business and you don't use that business and you don't use your house legitimately for that business and you pay yourself $14,000 for a 2-week rent for no reason at all, that you will lose that in an audit every time, regardless of whoever on TikTok told you to do that. And so, you know, you just need to make sure you're approaching it from that perspective, you know, and you know, can justify what you're using it for. But, you know, if I got a business and I got employees out of state and, you know, hey, they're going to come stay in my house, maybe that's a reason, you know?
Right.
And this is where if you have a good advisor, you know, they'll steer you down the right path as opposed to steering you down the wrong path and potentially getting you in trouble for it. And so, which usually in a case like that, they're just going to throw it's going to be monetary. You're not going to jail or anything typically, but, you know.
Well, I mean, I guess anything can happen. So what are some other things that maybe some small businesses can do? You mentioned the home office deduction. We're talking about this Augusta rule. What about equipment, machinery, sort of thing?
So that kind of gets into my level 2 tax planning, you know, looking at fixed asset purchases. That's always number one for operating businesses.
Fixed asset purchases.
So fixed assets is how we refer to it. And you know, what that means is your PP&E or your FF&E furniture equipment. We're going to have to edit.
What's the other F? We're not editing that, Chad. Forget that.
The property, plant, and equipment. I'm going to go back to my original PP&E.
Got it.
So machinery, computers, furniture, desks, things like that, automobiles, you know, those are all kind of in that fixed asset category. Improvements to real estate can be something, especially if it's corporate-owned real estate.
I wanted to ask you a bit about real estate, but sorry, continue.
Those are kinds of things in this level 2, which is, the fixed asset purchases. There's bonus depreciation. There's Section 179 that allow you bonus drop down to 80% this year, but 179 is still available. And so there's basically ways to write off that, full purchase. So that's always kind of number one for, clients that are kind of beyond your contractor, the contractor clients that get a 1099. And now, of course, for them, buying computers and things and stuff like that would fall under there. Retirement planning, looking at your retirement plan. Are you using 401ks? Do you have access to a 401k? Are you using that? And I think one thing on this front, it's important to note is, there's tax planning in the sense of getting a deduction now and lowering your taxes. And then there's tax planning in the sense of building wealth tax efficiently.
Right.
And Roth 401ks, I'm a big fan of. I encourage everybody to use that, if they have it available to them. That builds wealth tax efficiently. You don't get a tax deduction for it now, but if I'm 25 and I'm contributing $10,000 a year, to my Roth 401k for the next 20 years, that's $200,000 in initial contributions. That potentially by the time I retire could grow to, 400,000, whatever it is. That all that growth is tax free, I mean, what's better to save a little bit of money now or to get $200,000 later on tax free, And so, I encourage people to do that. There's a time and a place, I guess is how I'd say, for whole life insurance, which is another vehicle to potentially build some wealth tax free. Or tax efficiently, I guess I would say, for that. Don't go run out and buy whole life insurance. It should be a small percentage of your overall investment portfolio. It should never be the first investment you buy. That's kind of how I feel about some of that stuff. But, if there's a way to utilize that to help build some wealth, then it's something you probably want to look at. So I think it's important for people to understand that too, is, there's not always just saving tax money now. There's what's better for taxes in the long run. Still in that kind of level 2 territory, research and development used to be a lot more appealing, and making sure you're maximizing all of those. And ultimately you still have some requirement if you do have R&D to cap, to account for it in the proper way under the new rule. But that used to be something we always tried to, look at as much as we can. There can be a lot of timing strategies, depending on your revenue recognition and what's your basis of accounting. There can be timing strategies, and I work with clients at the end of the year to, look at, okay, what's coming down the pipeline, revenue wise, expense wise, is there some ability to maybe hold off doing some work that you were going to try to get done before the end of the year and push that out. Usually timing strategies will catch up with you at some point, but you can continue to play that game for some time. There's for pass-through business owners, partnership S corps, making sure you're maximizing your qualified business income deduction, which is a deduction that potentially allows up to 20% of the profit to be deducted. There are some limitations when you get over certain income levels. So, I have some clients that we need to make sure have paid certain amount of W-2 salaries and things like that to maximize that. It's really, I will say one thing about tax planning is it's really client specific. There's not, everybody do these things, right? And, I think it's really important to understand, for an advisor to understand the business that their client is in and how that works.
Right.
And identify opportunities through that process.
Right.
And so, I do think it's important for business owners, especially, to have advisors that they can talk to and be proactive with.
You mentioned 401ks, and I'm always shocked at how many people don't take advantage of the 401k because it's essentially tax-free money, or like you mentioned, if maybe it gets taxed up front and then doesn't on the back end. But at my company, we match, right? So we do a match of a certain percentage, and it's like free money, and people don't do it, especially younger people, which I don't understand. If you're a younger person, you should be taking advantage of that free money.
If you have a match, 100%, that's free money. You should at least contribute as much to maximize the match. I'll say again, and touching on what I view as a societal issue.
Right.
The stock market was built to invest, leave, and leave it in there for a long term. You know, we live in a society today of instant gratification. And, I talk to young people all the time, and, they, in their mind, if they invest 10,000 into the stock market and in a year it's not worth 20,
right,
they view it as a failure, right? And that's not a realistic expectation. And so what I see a lot of times when I advise people to make those retirement plan contributions and things like that, what I hear a lot of time is they don't like the stock market. They don't think they can get the return they can get in something else. And these are most likely coming from people that are not even investing that money in elsewhere. They're using it to go buy a car or a jet ski or whatever, right? And so their whole argument about return on it is just they just don't want to save the money, and a lot of people, they just don't want to do that, or they have an unrealistic expectation of return on their investment. And, I get it. I invest in my 401k. I have some other investments that I do. And so I try to diversify that a little bit. And I'm not an investment advisor, so there's no official investment advice here. But, what I would say to people like that is maybe diversify a little bit. Do some in the 401k and then do some with what you want to do, because that way, if all your eggs in one basket in these riskier things, I see people all the time, they'll get their first 50 grand and then they do some private investment with their buddy who's not putting up any money at stake, and they lose their whole 50 grand, and then they're mad about it and think they should save $50,000 off of their tax bill. And it doesn't always work that way.
Have you read the book Die with Zero? Have you heard this book?
Not, but
all right. So I'll give you the cliff notes on Die with Zero. It's pretty interesting. Shout out to Bill Perkins, who's actually invested in the satellite imagery space quite a bit. Anyways, so the idea with Die with Zero, which has actually shifted the way I think about saving a little bit. Your earning potential should go up over time, right? You should be able to earn more money in your 40s than you do in your 20s. So the idea behind Die with Zero is that you should be spending your money and investing on experiences while you're young and healthy and can do all these fun things, and then worry about your nest egg later in life when you have this higher earning potential. And then also, make sure you give all of it away before you die, so that you can actually see it in action, and that because money is more valuable now than it is later, you should give it away before you pass away. What do you think about this idea of dying with zero, saving based on your a larger earning potential later in life, and then passing money on to your children or whatever you want before you actually kick the bucket?
I think that's very interesting. What you're saying there. I think, my background is in tax. And so I think there's a tax concept called step up in basis. And so if I have a house or if I have stock outside of a retirement account, if I give that to my children during my lifetime, they get my basis in it. So if I have Apple stock that's worth $100 a share that I've paid $5 a share, if I give that to them during my lifetime, they inherit that $5 a share. So if they sell it, they pay tax on the $95 spread. If they inherit that Apple share of stock when I die, they get a step up in basis to that $100 mark. And if they sell it right away, they don't pay any tax. And so I think to that point, I could see the benefits of it from a non-tax side, right? And so, and I certainly have clients that do that, and they're like, I'm not going to die with any money. I don't need to do estate planning because I'm going to spend it all, right? And I got $10 million in the bank, but it's not going to be there for,
Right.
And so, I get that. I get giving it to your kid during your lifetime. The one benefit of that is maybe there's a way to teach them more responsibility. One of the biggest problems I see is kids inherit a bunch of money. They have no guidance. The parent's gone to guide them. They don't want to deal with the financial advisors. They just want their money. And,
Well, one of the points from the book is that, most people need money earlier in life than let's say, most people have kids in their 20s and 30s, and most people need money in their 20s and 30s.
Yeah.
Right. So by the time, they really need the money, the parent is 50 years old, nowhere near dying, 60 years old, nowhere near death. And that's when they really need the money, right? When they're starting their family and doing things. And, the impact of the dollar is far greater at that time. If you pass, $200,000 along to your child and your child's 70 and you're 90, like what does that really do for a 7-year-old? But for a 20-year-old and you give them 20 grand, right? That's a big impact.
Yeah. And I mean, if you're talking about just giving cash and things like that, then, you don't really have to get into those step up and basis issues. I mean, I think everything in my world, and this is one of the problems I see is people try to put these universal things across everybody and say everybody should do this.
Right.
And what I have found is everything is very client specific. What is your situation? What assets do you have? Okay, can you give them the money they need to buy their first house and still retain some of these assets that we may, want to pass along to them and utilize that step up in basis? That might be different for a client with $10 million of real estate, right? Versus a client that's got $200,000 in the bank and says, I want to give my kid $50,000. That client doesn't have a tax issue anyway, right? So giving them $50,000 now to buy their house, I get that. That makes a lot of sense, And so I think, again, it's very probably specific to each situation. And so... But I could see I could, argue really both sides of that because I like that. That point is 100% accurate. People need money most likely in that age of 22 to 30, whatever, outside of college. You're buying a house, you're getting married, you're having kids. And I don't mean to, I didn't get married till I was 43. So, I don't mean to pigeonhole it into that age group, but, I can see the benefit of going ahead and giving them money. And quite frankly, my mom doesn't have a lot of money, and she gave me $15,000 to buy my first house. And that turned out to be one of the best decisions as far as getting me on the right financial path and setting me up to be successful. And this is a woman that had, probably really couldn't afford to give me that money, and did. And I'll forever be grateful for her to that. And I have done what I can to pay her back. So on record, she won't take it all. So I have to sneak it to her. But when I sold that house, I made sure to give her what I could. So, yeah.
Well, that's cool, man. We talked earlier. We talked a lot about technology and things like that. What's going on with crypto? Like, what the hell is up with crypto?
Oh man, crypto. This is an area of IRS enforcement. I will say that they are certainly want to, we talked earlier, I think we touched on, you used the term overreach. I have to work with the IRS daily. So, crypto is very frustrating for them because they cannot control it and they can't get clarity into it. And in their defense, there's probably a lot of illegal activity being done with crypto, which is what they would say their primary concern is. There's also probably a lot of activity that makes it easier for, people to hide money, not report money, do things like that with crypto. And so they're all over this and they're going to try to get their hands around it. And they already have. I mean, most of the big, companies that operate in the U.S. have tax reporting packages and are tracking all that. And, to me, I'm a little more old school, I guess I'll say. And my concern with crypto is, I don't think anybody really knows truly what the hell it is, and so why would you throw money at something you don't understand? And I think we're finding out, a lot every day, more and more what it is. I do think all that being said, there's probably a need for a digital currency. Is there a need for 5,000 digital currencies? Probably not.
Right.
And so.
But my Dogecoin, Chad, it's gonna make it.
Yeah, I know it is. It's
gonna make it.
So is the Wamba Pamba coin that just came out yesterday. Or whatever.
Swap, Uniswap.
Right.
All that stuff.
I mean, I'll say this: I don't have any money in crypto.
Yeah.
I'm a CPA. I'm a little more skeptical. We're taught and tested on being skeptical, but I get it. I get that it's a potential growth area. I think, quite honestly, what has fed some of it is what I touched on earlier with this instant gratification. Everybody wants an instant return of, 500%. And so we'll see. I think there's going to be an evolution. What I truly think it is what it is right now is this is the, the extreme infancy of what is going to be eventually a global currency. That's what I think crypto is. How long it will take.
Crypto will replace the U.S. dollar somehow?
I don't know. I don't know if it's going to be the U.S. dollar or I think at some point our economy is moving so global.
There's a coin that's a U.S. dollar coin.
There is. And I think that was their intent to get ahead of it. I think.
But all that does is track the U.S. dollar. So.
Right. And then, you got China. You think China's going to say, hey, we're adopting the U.S. dollar?
No.
I don't think that will ever be the case. I think, again, getting back to one of the original points I made, if leaders and politicians could learn to compromise, I think you put a coalition together of the biggest nations and they get on board with one global currency, I think,
I hope that doesn't happen ever.
I don't know if it will or not, but
I don't like this idea of global anything, really. I don't think that.
I hear that.
I don't think it actually works.
I'm not advocating for it either way. I just think that's what I think this is.
Because each country, each nation has their own priorities. The country with the most money, which is the United States right now, we get to kind of make the rules, and that's good. That's a good thing, because I think we're generally decent people, generally. Not always. I'm sure other countries don't see it that way.
Mm-hmm.
But I'd hate to see some type of global currency. Anyways, talk about a little bit about like what's a smart tax? Like what do you mean by a smart tax?
So what I referenced there with a smart tax is tax rates right now are the lowest they've ever been in history. That I'm aware of. Some time, but I don't think so. And for example, the 24% bracket for 2023 for a married filing joint couple goes up to $360,000. Even in 2017, before the Tax Cut and Jobs Act, that if you were making $360,000, there's a large portion of that being taxed at a 33% rate, which is 9% difference there. So that's pretty significant, So a lot of times with my clients, we'll talk about paying a smart tax, and what that means is, okay, let's not do everything we can to drive it all down, right? Let's pay some tax and try to stay in that 24% bracket is essentially what we try to do. Because historically making $350,000 of income, paying 24% is low, really, really low. I see people all the time want to try to lower their tax bill by they just go out and spend money, on their business and
right.
And yeah, it lowers your tax bill, lowers your taxable income, it lowers your profit. But let's say the next year you need to expand and you want to buy a business or you want to buy a building and and you need to go to a bank and get money. Banks don't like lending money to people that don't have income.
Right.
So
generally frowned upon.
Generally frowned upon, right? On paper, it looks like you can't pay your bills. You don't make any money. So, I have one client that jumps out at me where very growing business, when he first started working with me, his account was doing everything he could and, depreciating everything. And they were showing no money. And he came to me and he's like, I don't know what's going on. I feel like I'm making money. The bank won't give me any money. What is going on?
Right.
And he was not getting the education. He was not getting the advice. So, we sat down, we looked at things, we talked long and hard about it, and we kind of decided, okay, let's plan on starting to show some income,
Right.
We've been doing that 3, 4, 5 years now. And he's not Donald Trump, we're talking him in that $300,000 space as far as where we kind of aim to end up. And so, but now he can go to the bank and get money. He's bought numerous pieces of real estate.
Right.
Because he's been able to do that. On paper, he's got people coming asking to buy his business. That's the other thing I see all the time. People driving down their EBITDA and their net income and all of this. And then they want to sell their business and they're shocked at what they'll get for it, because that's what a buyer is looking at. What have you made on paper, And if you're driving your EBITDA down to levels that aren't, businesses are bought and sold on a multiple of EBITDA nowadays. That's how it goes. I have not had a deal. Well, that's not true. Certain industries have other metrics that they use, and that is very true. But most industries, it's all a multiple of EBITDA. Now that will vary by industry, that multiple. But I see people all the time sacrifice value for saving taxes. And, when I help clients,
it's because, Chad, it really stings when you get that.
I get
when you have to stroke a check, a big check to the IRS. And I've had the unfortunate experience of writing some very big checks to the IRS that made me literally sick inside. I was looking at some of the numbers like, this is not real, right? This is not a real thing. It makes you sick, especially when you know that that money's just going into a black hole, So I get why some business owners would look for ways to lower their tax bill. I know I certainly think about it. It's not the first thing at all, but it's definitely there. Like, maybe I'll save a few bucks on taxes if I buy this new equipment over here, or purchase something else that can actually help the business run. But yeah, you definitely you don't want that to be first. You want your business to be first. You want your P&L to be first.
Right. And I think you hit the nail on the head. Do you need it? That's what I always ask clients. If they come to me and say, hey, I'm thinking about buying this, my first question is every time, do you need it?
Right.
If you spend $1, even if you're in the highest tax brackets, federal rate won't account for states, but you spend $1, you're saving 37%, but you are out $1.
Right.
Okay. If that's not a need, if that's not something that's going to help you grow your business, why would you spend $1 to save 37 cents?
Right.
You're out a whole $1, whereas you could just be out 37 cents, And so when I help clients make a decision, we look at 3 kind of buckets. One is the tax, first of all. What is it going to be the tax impact? The second is economic, which is different from the tax, which a lot of people think they are the same. How are you going to pay for that deduction? I'm taking on a loan. Okay, well, now you got interest. Or, hey, I'm taking this deduction. I'm sacrificing my business's value. These are all things that economically can be different than, what the tax impact. And then there's psychological. And unfortunately with taxes, I see people too many times make decisions based on their psychological desire, to not pay taxes, right? And I get it. I'm not saying they're wrong. I get it. I hear it every day. When Trump was the president, I had, X amount of people saying, I'm not paying any taxes while he's president because I hate him. When Biden is president, I've heard X amount of people say, I'm not paying any taxes because of Biden's president and I hate him,
Right.
Truth be told, they're both going to misuse your money.
Right.
In all honesty.
They definitely will.
And so, but that's where the psychological aspect comes into play,
I think we can all agree that both Democrats and Republicans suck at money. They just suck with money. They all do. They increase the budget every year. They overspend, underdeliver. I mean, it's just the way it is, I can't imagine having that thought. Like, I'm not paying taxes because I hate the president or something. That's just.
I've heard
that seems petty,
I've heard it a lot, and to me, it really goes back to
as if Biden's sitting there in the Oval Office just going, oh, let's see, Fred from Tennessee just paid me, $4,000. I'm gonna go buy a new pair of walking shoes, or whatever. Yeah, as if that's what's happening, right?
And I guess one thing I'll say, and to me, and I certainly didn't mean to make this political, and when people ask me, I say I hate them all, because I mean,
Right.
hate's a strong word, but I think they all operate irresponsibly. The fact that term limits,
Right.
they won't even talk about it, so you have these career politicians so disconnected from reality. My whole thing is I think we are very much as a society past the point of where you have to be Democrat or Republican. And to me, that's the biggest issue with our political system. I think the answer is in the middle, and you're always going to have your fringes on each side and let them be fringes.
Right.
But the majority of people are in the middle. Let's focus on that. And let's focus on what we can agree to, and not how can we manipulate to get what we want, and going back to that R&D example, if they would both just agree to that, that would be so much more productive than trying to each tie their own special interest to it, So.
Yeah. Well, I mean, that taxes are they're just by nature political, right? Because the people in power, which are hopefully voted into power in a legal and fair election, they're the ones that get to make the rules, right? So it's a political football, every time. That's why every single presidential election cycle, they have to propose what their new tax rates are being. Like, why does the president need to do that? It's because it's a political thing. It's how our money is allocated, or how we tax people across the country in different groups, and it's just a political football, which is just, it seems silly.
Yeah, and I think on both sides, you can make arguments that both sides are ridiculous.
I don't know. I've not heard too much ridiculous stuff on the right, other than the fact that they're not good at cutting spending anyways, so it doesn't really matter. I think the crazy stuff that some of the Democrats come up with is just insane. Socialism, this can't work, right? 90% tax rates, taxing wealth. All you're going to do is push people out, right? And then you're going to end up with less tax revenue. And look, if you lower taxes, you'll collect more in taxes, because people will stop trying to hide it and things like that. So
I don't know about that.
No?
I mean, I think people will always want to try to pay as little as possible, and I mean,
yes, but when you lower taxes, right, there's now incentive to do more business, or you know what I'm saying? Like, when the taxes are low, right, you can use more of that money for innovation, for research, for whatever, to help grow and expand either your business or even in your personal life. When you're not paying as much in taxes, you can spend more on other things, which end up as a net result being better. If you earn more income, you're obviously going to pay more in taxes on a progressive system. But if you have a lower tax basis, then you have more money available for other things. And I think the economic impact of that, right? Now, if I have more disposable income to spend on, I don't know, a car or whatever, well, guess what? The car companies are going to pay more tax, or that money is ultimately, it all ends back in the IRS's pocket anyways, right? And I think I think a lower tax rate makes a lot of sense for those reasons. Who can control the money better? Some people in Washington that are completely clueless, or the individual? I think the individual should control as much money as humanly possible. So that's my stance on it. I think the second we hit that button and submit our tax return or whatever, or send that check away to the IRS, it's gone. Like, it's completely useless. Like, it just goes into things that are so dumb that I think most people would agree that they don't want their money spent on these things.
Again, I do think everybody will agree that the government spends money inefficiently. I think there's no doubt about that. And again, I'm a registered independent, in all honesty and full transparency, because I have my frustrations with both sides of things. I guess one comment would be if somebody's got $100 million or $1 billion, do they really need $2 billion? And I don't feel like that's a socialist comment. I feel like,
did they earn
what
that?
do they need $2 billion for? You know? And
yeah, but they earned that through, you don't just get $2 billion out of the blue, right? Supposedly, if you have $2 billion, you've created so much value in the marketplace that your return is that money, right? Like,
right, but if you tax somebody,
$2 billion is a lot of money, right? And I get that, but that's the reward for taking risk. And if you try to remove the incentive for risk,
I'm not disagreeing with that. What I'm saying is, $1 billion, is that not enough incentive, right? And if you then tax that next $1 billion at whatever percent, are they more incentivized at that point to maybe pay their workers more? I mean, what's the average wage now? This year, average salary. I don't know, but even if it's $40,000, which I think is probably high, you cannot live on $40,000 and have a decent apartment or buy a house. There's no way. Do you know anybody in where we live in Wilmington, North Carolina, where they could buy a house on a $40,000 salary? So if that person is penalized more on that extra $1 billion, because really, what's that going to do at that point? He's got $1 billion.
Yeah, but this goes back to what I'm saying though. That let's say that person pays more in tax, right? All that does is it doesn't go to the lower income
right,
people.
But what I'm saying is if as opposed to paying that tax, because I do agree they would waste that money, isn't it better served upping their average employee salary from $40,000 to $60,000 or $70,000 or $80,000? It has been proven over and over again that the best economy is based on a strong middle class, and now what we're seeing now is so much more economic inequality, and I don't know what's right. I don't know what's wrong, but I wonder, okay, if you did tax that extra $1 billion at 90%, and I'm not saying, it would have to be a really high number, because to your point, they should be rewarded for those risks they took. Business owners should be. But what does it do if at that point, they do start to pay their employees, not the government, but pay their employees more?
If we have a true free market, right? In a true free market, employees can seek work elsewhere, right? And they should be compensated competitively. So if the market dictates that position should be paid more money, then that will happen, right? Or the company will go out of business, right? Think about, let's just say fast food workers, for example. The minimum wage you see a lot of places is $15 an hour. And if McDonald's starts paying $15 an hour, guess what? People are leaving Taco Bell, right? Because they're going to go earn the $15 over at McDonald's. And it's the same exact way in a true competitive free market. So I don't think that pressure on, it should be on some, the billionaires that own Walmart to increase everybody's pay. How many employees are at Walmart, right? If they did that, there would be almost no profits.
And I'm not saying to do that or not. I'm just saying I wonder what that looks like.
Yeah,
right, if that happens.
And it should. People should be thinking about ways to pay their employees more. We're always looking at, every year we go through and look at, are we paying competitive market salaries for the positions? How do we get more money into the hands of our employees? I did look up the average salary nationwide in the U.S. according to Forbes is $59,428. So that's actually pretty high. That's actually a lot higher.
Yeah, but that's I would say that same comment. How many people making $59,000 in Wilmington, North Carolina? I haven't seen a house listed in Wilmington, North Carolina for less than $250,000. And I've seen one of those, right? And so your average house is $300,000 to $350,000. Somebody making $59,000 can't afford to buy a house, And so
the median household income in the U.S. is $70,784. So again, here in Wilmington, the housing market's crazy, and I'm going through this right now. I'm selling my house, and it's just nothing's moving, right? It's just the way it is. but it is overvalued. That will come down as well. The housing values will go down. There's pressure from interest rates to push the home prices down. That's what will naturally occur. So it definitely went through a period there, right, where there was so much money in the space and coronavirus, and people were looking at their house saying, "Oh, I don't really like this place. Let me get out of here." So home values were shot through the roof. Well, guess what? It's gonna go back down. That's just what's gonna happen. So, but we can talk about worker wages
I think
and
one
increases.
thing we can agree on is, to me, there's so much laziness in the world. And to me, if somebody is willing to work hard and do a job, that should be rewarded, in my opinion, because I feel like that's a lost, kind of quality in a lot of people nowadays. Everybody wants to get paid more and do less, right? As opposed to
the
working harder to get paid more.
4-hour work week, all these books that come out.
Yeah.
You see a lot of influencers on all these platforms talking about how to make $100 an hour with AI, or how to do this with AI, or how to use Canva and create graphics and do all this stuff for on the side. Let's be real. If you want to make real money, you got to start a business, and you got to be all in, and you got to really dig into it. That's how you make real money. This like side gig crap, it's fine, but if you're not passionate about what you're doing, there's no emotion behind it, then you're just gonna it's not gonna end up doing very well. Well, cool, man. Chad, how do people get in touch with you if they want to reach out to Chad? If they want to see Max's taxes later on,
Max's taxes is still yet to come.
They're gonna hit you up on TikTok,
and so
X.
Truth be told, my client list is full, I would say, at this point, which is weird to say, and so I'm not actively seeking clients right now. My existing clients keep me busy enough, and so
I call bullshit, Chad. I call bullshit. You know why? Because I think if the right client that had a massive demand came to you and said, "Chad, I need some help," and just so everybody knows,
I'm a capitalist. So if they threw enough money at me, then maybe
exactly. And Chad is my CPA, and you kill it. I'm so thankful for you. You've saved me so much money over the years, and
for you too.
paying things, and we've done it in a nice, legit way. Everything's by the book. We follow the rules.
Take advantage of.
But we take advantage of the things that are there, and I think it's great. And you help me strategize and do all these things. So I appreciate you, and I hope some people got some good advice today.
Well, I appreciate you. I appreciate you having me, and thanks for the confidence over the years in me, and look forward to continuing to do it for a long time. So.
All right, y'all, check out Chad Wouters, CPA in Wilmington, North Carolina. Make sure you subscribe on YouTube. This is the NDS Show.